Thank you, everyone, for joining today to learn about how we can assure economic security for everyone in the United States, but across the world, of course. My name is Charleigh Flohr. I'm with the Human Rights Campaign Foundation. Human Rights Campaign Foundation, we're the public education and research arm of the Human Rights Campaign. We focus on issues that affect the lives of lesbian, gay, bisexual, transgender, and queer folks, not just here in the US, but across the world. I'm really excited to be moderating this conversation today. And with that being said, I definitely want to give our esteemed panelists the opportunity to introduce themselves. And we'll begin by having John start for us.
Thanks, Charleigh, and hello from Edinburgh, Scotland today. Delighted to be joining this conversation. I'm an insurance professional by background, worked in life insurance, pensions throughout my career. I'm now at a non-executive phase in my career, which started with being president of the Institute and Faculty of Actuaries, and most recently I've taken up a non-executive role at the Bank of England, which is the United Kingdom's central bank. And I'm also interested in run the Scottish Financial Risk Academy, which is an organisation that looks at the various forms of risk that institutions face and helps them manage those risks.
Thanks, John. Darrick, can you introduce yourself as well?
Yes, I am Darrick Hamilton, the Henry Cohen Professor of Economics and Urban Policy and a university professor, and the inaugural director of an institute on race and political economy at the New School. And I'm happy to be here talking about these important issues.
Thanks, Darrick. And last but not least, Sam.
Hi, I'm Samuel Hammond. I direct the Poverty Welfare Program at the Niskanen Center. We're a nonpartisan think tank in Washington, D.C. My work is focused on cash transfers, the effectiveness of cash transfers at alleviating poverty, and the complementarity of social insurance to a dynamic market economy.
Awesome. So as everyone can see, we have a lot of great minds and a lot of expertise to get through today. But the main thing that we're here to talk about, right, is how we can ensure that income security policy is inclusive of all people, of all communities, of all backgrounds, as we start to move forward past this thing that is called a global pandemic. One of the things, right, that has been so striking for us at HRC Foundation was that over a quarter of folks who are Black and brown and transgender have been unemployed since the start of the pandemic. With that being said, we really have to start thinking about the way in which folks of different intersecting identities, right, have to engage with policy systems to increase the level of economic security they have. So with that in mind, I definitely want to call upon each of you, maybe beginning with John again, to speak a little bit more about your work and what you view as our approaches to creating more inclusive policy for a more inclusive economy and economic security across the globe.
Thanks, Charleigh. Yeah, very happy to talk to that point. And the actuarial profession, one of the major bits of research we've been doing recently has been entitled The Great Risk Transfer. And that takes a very long historic look, probably going back a generation or two, to look at the way that financial risks that were once borne by employers or insurance companies or even government actually are increasingly now in this generation borne by individuals, because government stepped back, employers have stepped back, and it's now down to individuals who may not even be aware that they're running these risks, never mind being able to figure out how to deal with them and what actions to take. So, as I say, it's quite a long-term trend and quite a profound shift that is the backdrop to this issue. Now, in terms of how to deal with it, I mean, I think there are a number of potential policy options. So one of course is helping individuals make better decisions, educating them about the risks they face and what action they can take as individuals to improve their position. So that's certainly one rich vein. Another vein is around, I think, potential government intervention to avoid some of the worst outcomes that can happen. So if I explain for a moment, the market dynamic the market's a wonderfully creative mechanism, but it can sometimes create very dysfunctional outcomes. So, for example, in the market for, let's say, motor insurance, then any new insurer can come in and offer very cheap insurance to the lowest risks, and that's a great innovation to the lowest risks. But of course, that leaves those with higher risk behind, and they have to pay more premiums elsewhere. So you can imagine that dynamic happening through a number of markets. We're all wearing wearable health devices nowadays to give insurers data on our health. And again, they can use that to offer cheap insurance to the best risks and expensive insurance to the poorest risks, or maybe not even offer insurance at all. And I think you can certainly see where that can lead to bad outcomes from a societal perspective. So we've certainly seen in the United Kingdom some government intervention where, in the world of house insurance, where private individuals could not get house insurance because of flood risk, the private market simply wouldn't cater for it at all. And government had to step in and say, no, we're going to create an extra body here that will pick up the insurance cover for these people for whom the market would not cater. And I think it's those sorts of outcomes that we need to worry about, where individuals are being deprived of insurance, or it's being offered in terms that are uneconomic to them, that we maybe need to look for policy interventions to make sure the insurance is as inclusive as we as a society would ideally like, even if the market itself doesn't provide it.
And I definitely want to bring Darrick to also maybe speak to some of the aspects of like in economic rights, and particularly in the U.S., right? Like the kind of the role of race and things like assigning disproportionate kind of like insurance costs based on like perceived risk or calculated risk. Darrick, do you want to like add to that?
Yeah, absolutely. I think pretty much we need to expand our notion of human rights to include economic rights. It's well ingrained, whether realized or not, that civil rights and political rights are essential for people to have human dignity. But what's not as well ingrained is economic rights. And that's often juxtaposed against market notions of freedom and agency, where what's limited in that particular frame is the role of power and the role of capital itself, as well as the strategic use of colonialism, dividing people up based on identity, based on various social identities by which you can have a political economy that reinforces consolidation of economic and political power at the top by offering people horizontal positioning or status in exchange for vertical positioning. So in other words, the despotic appeal to white supremacy becomes more salient in the United States, the more unequal we are. What an economic rights frame would do, it would say that regardless of your gender, your race, your sexual orientation, your immigrant status, that just being a human being entitles you to a base level of resources and essential goods and services that without them, you really don't have authentic agency. And what are those things? A right to a job, a right to a basic income, a right to health insurance, a right to housing. It's an illusion of choice for people to engage in market behavior if you're hungry. It's an illusion of choice to engage in market behavior if you don't have access to quality schooling. So in these goods and services, we will not use as the sole criteria the rationing that comes along with choosing price and quantity in order to maximize a fiduciary responsibility to shareholders, but rather there would be a public role of government to provide public options, public alternatives in areas that, again, are so essential for human endeavor that without them, people really are at the whim of those with power and not with authentic choice.
Thank you for that. And and now, like, this actually reminds me of something at work, is that with like, particularly with like transgender people, right? There's a long history of unemployment based on just, various things, right? Stigma, bias, discrimination that have affected multiple communities in the United States particularly. And so one of the things that happens like with trans folks is they tend to get pushed into sort of survival economies. And so I think this idea of like an economic right, having a series of economic rights, right, speaks to how we can pull people out of those situations, in things like survival sex work, right? But Sam, like, I'm wondering how cash benefits plays into this, because one of the most effective things sometimes for folks in the communities that I serve, right, is giving them like cash in hand to actually do things and to control their own economic realities in the short term, as we kind of like strive for these longer term goals of economic rights. So like, I'm wondering maybe if you can define kind of like what these cash benefits are, what they might be, what's a good example of one, why do they work?
The idea behind cash and the role of cash, it sort of bridges a point you made and a point John made. In insurance markets, there's this phenomena of insurance pools unpooling or separating and turning to basically pushing at the high risk types to the margins. And at the same time, trying to reinforce that sense of a common pool, that we're all sort of part of a collective, while respecting the intersectionality of our identities and our backgrounds, is an incredibly tricky tightrope walk to walk. You could imagine two different regimes: one where we had Social Security for all, or one where we are attempting to subdivide and pick out particular identities with specific programs. And this sort of transcends race, gender, and personal identities. It includes things like we have a trade adjustment program for people who lose their job to imports. But what's the big difference between losing your job to a factory overseas versus losing your job to new technology, or losing your job to a recession, or losing your job to structural factors? So when we start subdividing these ad hoc sort of needs, we end up developing ad hoc programs that end up entrenching that bifurcation of society. So a lot of my work is focused on child allowances and child benefits, in part because family and the bifurcation of our family support systems leads to entrenched intergenerational poverty. So in the United States, we don't have a paid leave program nationally, for example. Many low-income families, when they have their first child, end up turning to traditional welfare programs as a kind of pseudo-paid leave. And that's sometimes they need those wraparound services, but other times that just pushes them into a bureaucracy in which they become trapped. And so one of the things I've been focused on is enacting a universal child allowance or Social Security for kids, to reflect the fact that families in the United States have this enormous diversity. You have professional families living in cities that are very focused on their career. You have rural, more traditional families that maybe only be a single earner. You have non-traditional families, including gay and lesbian families that adopt or foster children. And we could have one program for every one of these particular types, or we could have a universal cash benefit that reflects that diversity and lets people use that money and resources in a way that's suited to their local circumstance.
Thanks for touching on that. I think I would maybe like to hear some more of the details about maybe like the Canada child benefit, maybe start shifting into a conversation about what we can learn from like outside of the US to make changes within it.
So, Canada, I've used as a reference point for a while, not just because I'm from Canada originally, but also because trying to understand what policies can work in the United States. Sometimes we point to Sweden or Denmark, and there's a lot you can learn from those international comparisons. But I think for low-hanging fruit, we can look to our peer countries in Australia and Canada, where they don't have 90% unionization rates. They're not. They're very similar labor market institutions, And we can study the effect of child benefits in those countries and hope to draw similar lessons for the United States. So in 2006, Canada enacted universal child allowance of $2,000 per child, delivered in monthly installments. It's since been expanded to include all kids and increased to, at this point, over $6,000 per child, on the order of $500 per month. And all families in Canada receive, or about 90% of families in Canada receive some benefit, but most families receive at least $500 a month. And we've seen from that lesson that universal child benefits do not discourage work, as some people feared. In fact, there's going back to my original point about cash being kind of flexible for different circumstances. Never married women who received the benefit increased their work effort because they used the cash to afford childcare, whereas some married families in which the mother does not have a college degree, on the margin, reduce their work effort by staying home a little bit longer after childbirth, by moving to more part-time work. So it demonstrates that first of all, the sky doesn't fall when you have universal benefits, and second of all, that they're effective at triaging resources in a way that reflects personal needs, and including the needs of the children, which in my work is really the focus. When Canada first enacted their child allowance in 2006, there was an event study that looked at the before and after. And in the aftermath, when you study the consumption behavior of those families, they ended up spending money in two different buckets: the education bucket, or the resource bucket, where it's sort of direct inputs on child health and well-being, but also what are known as household stability items. So simply having that stability to afford rent and transportation has benefits of its own, because much of domestic strife sort of is downstream of financial insecurity. And so one of the surprising things is that for every $1 the Canada Child Benefit increased, households reduced consumption of alcohol and tobacco by 6 cents. And I'm not personally opposed to people spending the money however they want, but I think that's a marker that having that financial security helped reduce household stress.
I think that's so important, looking at the outcomes like that, especially like you said about there was a reduction in purchasing, I think it was alcohol, right, by 6 cents. And I think that means particularly a lot, right, for families and households that might already be at higher risk of using substances like alcohol. So I definitely think there's a lot to learn from there, that not just that we can take care of kids, our children and youth, but that also has other wide-reaching impacts than just on, the well-being of children and youth. John, I think I want to turn to you now to maybe give us maybe some examples from the UK that could enlighten us, and then I'll shift us to maybe to tie these two kind of case studies, and if you will, into some broader kind of talks on economic rights.
Yes, certainly, Charlie. I mean, probably the biggest effect and most effective intervention on inclusiveness of, it's actually savings rather than insurance, is in the realms of pensions in the UK. So as I mentioned in my introduction, employers had for many years been stepping back from offering retirement savings plans to employees. And so we found ourselves roughly about a decade ago in the UK concerned that there were upwards of 15 million workers who were not making any provision for retirement. Now, in theory, there was nothing to stop them making their own provision. They could have gone and speak to a financial advisor, approached a pension company, paid in their own savings. But for many people, those were actually quite remote institutions and not something they would typically think of doing. And of course, they were also at the mercy of the price calculation. If they were paying in small premiums, because if that was all they can afford, then actually the charges available would often eat into the savings in a very material way. So we had quite a dysfunctional retirement savings regime. Now, what the big government intervention did was it said, well, first of all, we're going to make these pension savings more available to people. So what they insisted was every employer must act as a gateway to retirement savings plans so that every employee can get one whenever they want one. So that was the compulsion on every employer. Then what they did to make sure that people would make a good choice was they said, we're going to assume that unless individuals act, they are going into the plan. Now, they can choose to opt out if they want to, but behavioural economics and inertia, as it was, it ends up with 90% of people have stayed in. And so the big result of that is, I think we've now got 7 or 8 million more people actively saving for retirement than had been previously. And because of the bulk nature of the arrangement, government basically introduced a price cap on the charges at a very competitive and low level. So it's been a wonderfully successful initiative in terms of giving very substantial coverage of value for money savings arrangements. So I think that's it may well also have some benefits in the world of insurance. Again, where it's a model that if you've got individuals who are high risk and high charges, maybe if you bring them together as a collective and negotiate on their behalf, you can get inclusive premiums, inclusive insurance at a value for money price. So I think that's a very interesting intervention that could offer some lessons.
And now I want to tie in this idea of economic rights, Darrick, because when I hear about thinking about like what we want folks to save for retirement, right? Not only do we need to have like a policy in place to encourage folks who have like the capabilities to save, right? To do it and to have a policy and a system and a regime, right, that supports that. But also like, what about the folks, right, because it's not guaranteed, who don't have a job, right? Who can't set themselves on a long-term path to overall save. So why is an economics right framework having in place important to these conversations?
Even language around encourage and capability. I think the example that was given by John even provide a structural change that it wasn't just an encourage or capability, literally provided a different structure that allowed a greater risk pooling and risk sharing and avoidance of price discrimination. So, I think we need to even just think about new rhetoric and how we talk about where the onus of responsibility lies. Is it an individual responsibility? Right. But that aside, I also want to go back to one point that Sam made. Sam said that I might paraphrase a little bit. He said, Social Security for all. It's important for us to realize it wasn't always Social Security for all. And this is going to be related to the answer to your question, Charlie. Originally, when Social Security was implemented, it was exclusionary of domestic and agricultural workers who at the time, 90% of Black women were in those categories of work and over half of Black men. That was not unintentional. That was not a coincidence. That was by design. And then in a lot of New Deal policies, by implementation, it was implemented at local levels in a Jim Crow Southern context where there was outright discrimination in terms of who would have access. So I guess the point that I'm trying to make and tie in this economic framework, what I presented originally was incomplete. It has to be explicitly anti-racist. It has to be explicitly anti-sexist. We have to make sure that by design and implementation, when we do these rights framework, that they're inclusive of all groups. And that's not a subtle point. That's an important point to make, because our history has shown that even in the realm of economic rights, that we often have purposefully excluded people.
And I want to get to this point of exclusion too. I actually think this ties into a really good question that I have for y'all. I think maybe we'll start off with John and then see what else that folks have. So we've talked about inclusion, like why including folks of different backgrounds, including children and youth, right, in our policy frameworks is important. But I want to talk about exclusion, or maybe lack of inclusion, for a second. So like in the United States, right, one of the premier tools for measuring things like unemployment, earnings, et cetera, is the current population survey. And, one of the features of it that is difficult for me is that it doesn't have measures. It doesn't have data, right, on things like sexual orientation or gender identity. So some of the key data is missing for some of the communities that we want to include in our policies. So I think maybe starting with John and then see what other comments Sam and Darrick you might have on this. Why is it important to have not just inclusive data collection, but like good data collection in general for when we're making these policies?
Yeah, thanks, Charlie. Yeah, I very much agree with the concept of capturing data to enable us, I guess, to have a view on how inclusive various aspects of a kind of financial policy are. And, for example, I guess, we're going through a situation in the United Kingdom just around gender at the minute where we're comparing the salaries that women earn versus the salaries of men. And just by shining a light on it, it's creating really helpful debate and change as a result of just publishing data that was buried away in the first place. So I think that that point of capturing the data and publishing it can drive the right sort of behaviours. The one kind of word of caution I think we need to make is ensuring that data is used kind of ethically. So if for example, some of that data collection can be used to infer something about an individual's risk and therefore the insurance price that they should be offered, it could end up being exclusionary. So I think it's be careful to have a kind of code of conduct. We've got a very significant bit of legislation in Europe called the around data called the Generalised Data Protection Regulation, and maybe something like that might be a requirement to go alongside wider data collection that you're assuming, but generally in favour with the protections.
And Sam and Darrick, please feel free to jump in if you have thoughts on this.
Well, I think one thing to consider is so within the COVID relief bill that's currently moving through Congress, there is a version of a universal child allowance. It would only be for 1 year, but I think Democrats intend to make it permanent at a later date. Over the last, say, 4 or 5 years, there's been a really growing interest in basic income and things of that nature, and a number of pilot studies that have popped up. And I think one of the shortcomings of those pilot studies is always that they're looking at a very subset of the population. But now we're going to have a natural experiment of sorts where, beginning as soon as this summer, families will be receiving monthly or quarterly payments based on the number of children they have in a way that's flat and not conditioned on their income. And I think, whether or not it gets renewed in a year, I hope it does. But scientists and researchers should be starting right now to put together a longitudinal study to track some of these families and see what the impact of this is, because when it becomes debated a year from now whether we should make it permanent, having that data will be really useful.
Yeah, a couple of points. One is it's critical for us to measure things. Data reflects values. So if we're not capturing information, that's a problem. So not only should we collect information on various identity groups, also what we measure is important as well. So our values in terms of what we measure and what's emphasized. Right now we emphasize GDP and GDP per growth in a macro sense, but there are other indicators of human capabilities that perhaps should be presented in our national scorecards that would lead us towards better public policy, because it would change what indeed we value and what we measure. So just like people say budgets reflect values, so does data. So historical example was HMDA. Collecting the mortgage HMDA data allowed us to detect discrimination. And in my view, there was some transformative results as a result of simply collecting data. We might want to think about requiring or at least asking about race, ethnicity, and other identity when we do appraisals. There's evidence to suggest that there's a premium or a cost associated with one's race or identity. And perhaps if we had the data on a micro level, we'd better there'd be more accountability in how people the agency people have in choosing how to rate somebody. And then I want to go back and again, just to make this lively, push back against some of our panelists. I'm all for cash transfers, unconditional. I'm not in favor of universal basic income. I'm in favor of guaranteed income and basic income. And I'm all in favor of child tax credits that are refundable, or if we want to call them direct cash assistance based on children, however we frame it. But, I would argue that's not necessarily universal. That's universal amongst children, but not throughout the whole economy and towards everyone. Similarly, Social Security is targeted also not only in a progressive manner, so-called progressive manner in the amount that people get, but it's also targeted towards a certain demographic of the population.
So would the suggestion then be to model more policy like Social Security, for example, where it's targeted toward those demographics, or something more broad, just to pull that out?
Yeah, and I'll briefly, and I honestly know that Sam and I agree a lot more than we disagree. Let me say that wholeheartedly. This is perhaps, not a subtle nuance, and he may disagree, but the universal aspect of universal basic income might have some unintended consequences, such as it might distort resources. If you're a subsistence population, if you're given income, by definition, you consume it. And it's good that you consume it because you need to consume certain things. If you're wealthy, you're probably going to save or invest it. And then in the dimension of wealth inequality, it might actually lead to greater wealth inequality. So that's a concern I have. And then also, I think it becomes more inflationary if it's not targeted in a certain way. By targeting it to children, we're saying that for that demographic, we want to divert more resources towards family with children. But if we made it universal, it very well almost becomes the definition of inflation.
Thanks for that. And Sam, I definitely want to give you an opportunity to give some thoughts on that. And then I think it'll be a great time for us to move into the Q&A session. So Sam, if you want to offer some final thoughts for us to close on, that'd be great.
Yeah, I'm not a proponent of universal basic income either. One of the reasons I focus on child allowances is in part because I take a very comparative view of institutions. And when you look at sort of the portfolio of social insurance welfare programs that other nations have, many enacted, their largest social insurance or public pensions and so forth in the 1930s and 40s, just like the U.S. But they also, at the same time, enacted universal child benefits in recognition of how they were complementary. So, on a very first blush, poverty, at least the way we measure it, is sort of a function of the arithmetic of having one market income divided by extra dependence. And so there's, I think, a genuine market failure here where families or households that are raising the next generation are essentially given the same, for the same skill, given equal resources as childless households that are not undergoing that sort of side job of raising kids, which is in some cases a full-time job in itself. I do think universalism, or what's sometimes called conditional universalisms, or universalism for a specific group, whether it's pensioners or families of small children, I do think it has a very salutary dimension from the perspective of political economy. So, Social Security, as we have it, is one of the most effective anti-poverty programs in the United States, but it's not an anti-poverty program per se. It is a retirement security program in the same way that a universal child allowance could be thought of as a family program that happens to cut child poverty in half. And I am sensitive to the history of exclusionary policies. I do think that sometimes that history gets a little bit muddled. So, in the case of Social Security, there's a very rich record of Henry Morgenthau Jr.'s rationale for excluding domestic and agricultural workers. They were eventually added in, less than, I think, 5 years later. But the primary reason for that was actually the difficulty of administering payroll taxes in those sectors, and they actually modeled Social Security after the United Kingdom's pension program that also made those same exclusions, at least initially when they were starting the program up. So, I think in the longer run, you look back at the impact Social Security has had on particularly the African American community. Today there's a large racial wealth gap, and when you look at the racial wealth gap net of the impact of Social Security, it falls from 7 to 1 for white and black to 2 to 1 white and black. So Social Security is a huge source of sort of de facto wealth. And it's true that universal programs can sometimes be sort of quasi-universal or exclude people through technocratic excuses. And I think that's something we have to be vigilant of. But I also don't think I also don't think you gain a lot by moving away from the rhetoric of universalism.
Awesome. And I think with that note, we will move into the Q&A session. So thank you to all of our panelists for this great discussion. I can't wait to start looking over some questions.